Real estate, like any market, moves in cycles. There are booms, where prices soar and competition is fierce, and busts, where uncertainty rises, demand slows, and prices soften. While most investors chase opportunities in upcycles, the most seasoned and successful ones know the greatest wealth is often built during downturns. At Venus Venture, we believe that buying strategically during market down cycles is not just a contrarian approach, it's a smart, proven way to generate long-term, outsized returns. Here's why buying real estate during a down cycle can be your most powerful investment move. Down markets are buyers' markets. Motivated sellers, whether individuals, developers, or banks, are often more flexible and open to negotiation. This creates rare opportunities to acquire assets at steep discounts to their intrinsic or future value. When you buy low, you're not just hoping for appreciation, you're locking in instant equity. This reduces your downside risk and increases your potential return on investment when the market rebounds. During economic slowdowns or, when interest rates go up, a lot of investors just kind of retreat to the sidelines. Financing gets a bit tighter, and short-term sentiment can really drop, but honestly, this is exactly when opportunities are most abundant. With fewer buyers out there in the market, competition for quality assets really drops off. This gives you the chance to secure properties with better terms, take your time with deeper due diligence, and avoid those stressful bidding wars, which is something you almost never see during a market frenzy. In hot markets, sellers usually have the upper hand, but in down cycles, buyers actually gain leverage. Whether it's negotiating price reductions, getting seller financing, asking for repair credits, or even pushing for extended closing timelines, there's just a lot more flexibility to work out a deal that really works in your favor. Venus Venture's experienced acquisition team takes full advantage of this dynamic, structuring creative, favorable terms that improve cash flow and limit capital at risk. It's all about making the most of the opportunities, When prices drop but rents remain stable or decline at a slower rate, yield spreads improve. In other words, you're paying less for the same or slightly reduced income, which results in stronger cash-on-cash returns. It's a pretty neat situation to be in, if you ask me. This is especially true in multifamily and value-add projects, where operating income can be enhanced through better management, renovation, and repositioning, independent of market cycles. It's a smart way to navigate through the ups and downs. Wouldn't you agree? History has shown that real estate markets recover, and often with significant gains. When you buy during a downturn and hold through the recovery, your return doesn't just come from rental income or improvements, it comes from market-driven appreciation as values normalize or even surpass previous highs. This recovery creates a multiplier effect. If you combine your initial discount with value-add strategies and market recovery, you can achieve exponential growth. Real estate is honestly a long-term game. While short-term volatility can seem daunting, it is also an opportunity for long-term positioning. Acquiring quality assets during market lows sets up your portfolio to outperform for years, if not decades. At Venus Venture, we focus on 5 to 7 year horizons, giving us time to enhance value, optimize performance, and time exits in more favorable conditions. During economic slowdowns, inflation often follows or persists. Real estate is a tangible asset that often keeps pace with inflation, especially if rents are adjustable or lease terms can be reset regularly. Buying during a down cycle allows you to position into hard assets before inflation drives up costs again. Buying during a down cycle is not about being reckless or fearless, it's about being strategic, informed, and prepared. It's about having the discipline to go against the grain and the confidence to act when others hesitate. At Venus Venture, we are built to thrive in such environments. Our approach blends deep market research, value-add execution, and hands-on asset management, enabling us to turn short-term fear into long-term financial freedom for our investors. In real estate, timing matters, and there's no time like a downturn to build wealth.